traders, and welcome to my channel. In this video I will be sharing with you a very simple but highly profitable trading strategy using a few indicators and also mastering the entry and exit points using these indicators. Before I get into the indicators, I would like you to just observe on the screen as I'm using my iPad. It should look almost the same if you turned your phone into a landscape. It should look exactly the same, and if you can see the top, you can see that I'm in the 5 minute time frame, and I'm looking at crash 1000 index. If you want to know what broker I'm using, you can check on the link in the description below, and you would find the name of the broker, and you can sign up for a free account. Also, like and subscribe to this channel so that I will be encouraged to post even more strategies that will help you to make some very good money trading. So let's go into the indicators quickly. I have a moving average which is 150, period 150, shift 0, method simple, apply to close. There are no levels, and we are in a 5 minute time frame, and you can style it red. Let's say red for the purpose of this video. I'm using a red. And the second moving average on the main chart is with period 15, shift 0, method exponential, apply to close. And the style, you can style it green. And then also finally the last moving average is also an exponential moving average with period 10, shift 0, method exponential, apply to close. There are no levels, and you can choose orange or as I have, or any other color of your choice. And then when you're done, you can click done, and then we'll move on to, first of all, set up our relative strength index in the indicator window 1. And when you go into the relative strength index, the settings are here. Period 14, apply to close, and levels are 20, 80, and 50. You can give it the color, the main. You can give the main the main style, the color of your background. So because we do not want to see the main moving average inside this one, we want to see just the levels, and so we have the levels 20, 80, and 50 all in color blue, and you can give it 2 pixels, and that's it for this one. And then the last indicator we'll be using is the Ichimoku Kinko-hyo, and we have Tenkan-sen 5, Kijun-sen 2, Siku-span B 52, and it's a fail. And we will have the Tenkan-sen, the color of your background, Kijun-sen, the color of your background, Chiku-span, the color of your background, and then finally up Kumo green, and then the down Kumo red. You can change the colors to suit your own preference, but you can stick with the green and the red to indicate for you when the chart is up and when the chart is coming down. And that is it for the indicators. Again, if you want to know which broker I'm using, you can go down into the description below and find the link there and sign up. You can also follow the Telegram group where I post signals for you to take pick and trade for free until you have studied this method properly, and you can pick out the trade opportunities by yourself. And so you can join the group, subscribe to the group on Telegram, and also like and subscribe to just this channel, and then you can get more videos like this in the future. So if you're looking at the chart right now, you can see that crash 1000 is just making a downward turn at this point right here, and it's on the 5 minutes chart. It's on the 5 minutes chart, 5 minutes time frame, and you can see that it's heading down, and it's been spiking since the moving average is crossed the price chart right here. And so you can see that this is obviously a downward movement. However, when we go into the 1 minute time frame, you can see that it even started moving down a while ago, and it's already reaching the base or the end, the low level, the support of our relative strength index, and it's been in red for a while. So if you like to have been scalping the 1 minute time frame, then you would have started scalping when the red moving average 150 crossed all the two other 15 and 10 moving averages and went over the price chart, and the price chart went below the moving average. You would enter your trade around this point, and you will follow, or you will stay or hold. Do not be afraid to hold, because it always trades to the extremes. If you can see from here, once it hits the base here, and let me put this here, once it hit the base here and the Ichimoku turned to green, it began to rise, and it's been on an ascending movement from then on and all the way up to this point. And that is when the moving average crosses through the price chart, and that is when you should not still remain in the position, because there's likely going to be a change in direction. And so you can hold a position from when the Ichimoku turns green all the way up until it hits the 80 level, somewhere around here, and you can exit. And this is a whole lot of money that you have just made. You would have made a whole lot of money from all the way from here all the way there. You would have taken a lot of candles, and yeah, you can exit the trade. And so this is just one. If you backtest this method, you can go further back, and you can see that there's another opportunity here where the moving average crosses, and then the Ichimoku also touches the 20 mark down there on the RSI and turns into green and begins to grow. And then when the moving average when the moving average actually crosses the price chart on the main chart right here, that is when you want to enter the trade and hold that position until the moving average crosses again over the price chart, and you can exit the trade. So this is another entry point. You can go further back. Let's see if I can find. And one other thing, the times to stay out of the market is the times when the market is not trending, and the price, the moving average 150 seems to just be zigzagging through the price. You want to stay out of the market when you see that, because it's not made a decision yet. It's just moving sideways, and the market is moving sideways. You don't want to be in the trade. You want to wait for this. You want to wait for trending moments like this, when the Ichimoku is just crossing over the 20 mark and is heading upwards, and the 150 moving average also crosses the price chart on the main chart and goes below the price, and the two 50 and 15 10 and 15 moving averages and it begins to go all the way up, you see that it's been on this position or in this position for quite some time, and this is crash 1000. And there are so many of such trending moments that you can take advantage of and make some good money for yourself. Here's another one right here. It goes all the way up, and you would have taken all these candles and you exit somewhere around, just around here. Just when it moves above the 50 mark, you can exit. Do not be greedy. A lot of trade advisors or a lot of trade strategists will advise that you exit just above the 50 mark, to make sure that you do not lose your profit. You want to stay in profit. You don't want to make the profit and then get taken out by being surprised by spikes. So you can just back test this method for yourself and master the entry levels or the entry points, and you will be in good profit. If you master or if you study it properly, you can see that this trend is just turning upwards, and the moving average has not yet touched the price chart. So do not be in a rush to think that it will definitely cross the moving average over here, and so you enter the trade here. No, it could actually continue on going lower and lower, and you'll be taken out by spikes if you are tempted to enter in at this point. So wait for the price chart to cross the moving average and be above the moving average 150, and then you can enter your trade. Let's try boom 1000. Boom 1000 also follows the same trend, but it's reverse. If you want to catch candles instead of catching spikes, you look for the trending moments. The trending moments are where the price chart has completely moved away from the 150 moving average, and the 150 moving average is heading in a particular direction, and that should tell you that that is a long trending chart or entry. And this is an example of it. Here, right here, is an example of a good entry. The Ichimoku has just turned green, and the moving average has crossed above the price chart, and the Ichimoku down in the relative strength index has also heading it has also turned red, and there you can enter your trade right there, and then you can hold. Do not be afraid of the spikes that might come. Just watch the 150 moving average and the direction it is heading, and you would see that you would be in this position or in this trade for a very long time, and you will catch a lot of candles. This is also a perfect entry. This right here is a perfect entry. You can enter in the trade here. You can see the moving average went all the way up and it's completely separated from the price chart. Our Ichimoku has just turned red over there, and it's heading down, and that's your entry, and you hold that position until it crosses the 20, the 50 on the RSI, and as you can see, it begins to move sideways a bit before it continues the trend downwards. But this is where you want to exit the trade if you want to secure your profit. If you let's look at another. This is also another good entry when you want to catch spikes. I will do another video for this, for when you want to catch spikes with this method, but let me just quickly give you a spike entry right here on the boom 1000. The same thing, opposite what we were doing catching the candles. We look out for when the moving average 150 crosses below the price chart on boom 1000. The price chart is completely separated from the 150, and it's the 150 moving average, and it is moving upward. And you look on your price chart, and you also see that the Ichimoku has just turned green and is heading upward. upward towards the 50 with the center mark. You enter that trade right here, you enter the trade right here, and you hold it. You can catch all these spikes all the way up until it reaches this point, and right there you can exit your trade, or you can exit your trade here, and to ensure, because by this point the Ichimoku has crossed over the 50 mark, and that should be my safe limit. That will be my safe limit. I will exit the trade right here, and this would be if you can if you have a little extra money in your account and you want to hold, you can still hold this position, because the moving average is well away from the price chart. Now you can see that this could have continued down and it will take you out, so do not take risks here. Just move on, find another entry point. It also has a lot of these trades right here. This is another one where you can enter here and you exit right there, right there. Then you can catch candles over here on boom 1000. You enter here, hold until you see after this first spike. You can exit. You don't even wait for the spike. Actually, once it crosses the 20 mark, you have to exit around here somewhere, just to be safe with your profit. And you can back test as far back as you like. You can see multiple opportunities to enter. So that's it for this one, guys. If you want to take signals from of trades like this from me, you can follow the link below and subscribe also to this channel, and I will be posting more videos on this strategy and many more strategies to come, and help you to make some more money on this platform. Thank you and see you.